Hi everyone, welcome back. This lesson we will discuss and analyze timeframes and how to best utilize it to inform your trading. Here's an overview of the lesson. We'll discuss time frame selection and how to differentiate between the time frames, expectations when using time frame analysis, multi-time frame analysis and how to use different types of time frames to best inform your trading, and time frame priority and overall its relation to market structure. So multi-time frame analysis is essential when viewing any market. Regardless of what time frame you like or what time frame you want to base a trade off of, you need to look at multiple time frames to have a broader view of the overall market and the financial asset. This can be important for all styles of trading, whether you're scalping, day trading, swing trading, using low time frame or higher time frames, LTF or HTF. Multi-time frame analysis will positively affect how and when you enter and exit trade positions. It will give you greater accuracy in your entries and your exits, allow you to spot trend reversals and continuations and indications of that, whether that's appearing on lower time frames or higher time frames, and give you different perspectives on macro versus micro structures, the bigger picture versus a zoomed in and highly focused analysis. So here is some clarification between the differences between high time frames, HTF, and low time frames. So we could consider higher time frames to be the monthly, the weekly chart, daily or multiple days charts, 12-hour, and more. This is not limited to just this listing. These are just some examples. On the other end, we have the low time frames, LTF, which we can consider the 1 hour, the 30-minute, 15-minute, 5-minute, 1 minute, etc. Now, it's important to note that time frames are relative to each other, meaning that the 4-hour is a higher time frame compared to the 30-minute, but is a low time frame compared to the daily chart. So it really depends the context of how you're using which time frame you're looking at. So in context, the 4-hour compared to the 1 hour, the 4 hours considered a higher time frame, but compared to the daily, the 4 hours considered a lower time frame. So it really depends on what you're basing your analysis off of. Are you looking at anything larger than that or significantly larger than that time frame, or if you're looking at things or at a time frame significantly smaller? Now, in regards to expectations, we want to consider what could price do at a certain level on a given time frame. And in regards to time frames, this helps rein in our expectations and have a plan as to what could happen. So higher time frame trends typically last longer and are harder to reverse, and typically higher time frames are where we will find the dominant trend, the overall market structure of what's actually going on a larger scale. Typically, bigger moves are more likely to originate from higher time frame levels and patterns, so it can be beneficial to focus in on those higher time frames, such as the monthly, the weekly, the daily, and see where these larger market moves and the larger market structure changes, market structure breaks, and overall reversals could originate from. Another thing to consider and change your expectations is in regards to the length of each one of these patterns and price moves. So price moves can take more time to play out on the higher time frames. Consider if you're looking at, let's say, a weekly chart. Each one of those candles represents 1 week worth of time. So a pattern or some sort of setup that you find on the weekly chart is going to take weeks, days and weeks to play out. It's going to take a significantly longer amount of time. You might look at that, and a trend or a typical market structure or a dominant trend on the weekly chart could take weeks, if not months, to fully play out. And if it does reverse, it would take that much longer as well. Now, some examples could be found when price is showing an uptrend on higher highs on the 1 hour time frame during a weekly downtrend in regards to where we see lower highs on that weekly downtrend. So here's where we start to shift our expectations in regards to finding signs of a reversal or changes of that dominant trend. We want to find that on the larger time frame. If we're looking for a reversal or some sort of shift on this higher time frame, it should be found on that higher time frame, such as the weekly. Price showing an uptrend, higher highs on the 1 hour time frame, it can be considered irrelevant to what's really happening on the bigger picture on the larger scale. Another example of changing our expectations can be found when price meets daily support or resistance versus when price meets the 5-minute support or resistance level. So price meeting 5-minute support and resistance level, that could be shifted or broken through in a matter of minutes or hours, as opposed to a daily structure, which could take days, if not weeks, to really substantially pass or to overcome or to be rejected. And it would take much longer for price movements on this daily structure to play out compared to something that we would find on a 5-minute chart. Another example, if a price pattern on a 1 hour market structure versus a price pattern on a weekly market structure, the weekly would take significantly longer to play out. Once again, that weekly chart is made up of candles that represent 1 week's worth of time. So it's going to take weeks and possibly even months for that price, that market structure found on the weekly to significantly play out and to really settle and reverse in either direction. So here's an example of this is Bitcoin. This is Bitcoin to US dollar. The top chart is the weekly chart, particularly focusing on 2021 into 2022. And the bottom chart is the 1 hour chart, focusing on the highlighted area in the weekly. So this is late June 2021. So this would be about the 22nd, 23rd, all the way to the 30th. So on the 1 hour chart, if we're only focusing on the 1 hour chart, we generally are seeing arguably ascending highs, right? We're seeing these ascending lows. So here's a low, here is a higher low, another higher low, another higher low, generally ascending lows, and we're starting to see consecutive higher highs. So we could say this 1 hour market structure is in an uptrend. Now, in context, we look at the weekly structure. Really, the weekly structure is in a downtrend. As we could obviously see here, and it has been in a downtrend since early May, falling from highs of 60 and with the prices at this current level. So really, we want to always keep in context the larger time frames. What's going on? What's the overall market structure? Because this is in context and in relation to the weekly, it's not as important. We can't really say this is in an uptrend because really the bigger picture indicates that we're actually that this was actually in a downtrend at that particular time.